Good afternoon, everybody. Okay, welcome. Good afternoon. Thank you for joining us. Welcome to the Mora Incorporated Wealth Planning webinar. Thank you to everybody who's joined us. I'd like to welcome our MD, Mr. Roshan Mehra, who will be our host today. Welcome, sir. Mr. Mehra has over 23 years of experience in the finance industry. On his panel, we have Discovery's Etienne Bosch, who has local and international investment experience for over 23 years. He has a BCom postgraduate in investment and in analysis and portfolio management. He is also a PSG certified financial planner. Welcome, Mr. Bosch. Accompanied by Mr. Luke Howard. Luke is from PSG, also a certified financial planner. He is one of the new breed of planners who brings with him a sense of purpose and direction into your investments. Welcome, gentlemen. We wish everybody a great afternoon. I'm going to hand over now to our MD, Mr. Mehra, and may you have an informative afternoon. Thank you. About questions and answers, we have a question and answer session, which will be at the end, but you can submit your questions as we go throughout the presentations. Thank you. Enjoy. Mr. Mehra.
Thank you, Sivu, for that introduction and welcoming our two honored and esteemed guests. Firstly, I'd like to thank both Discovery and PSG for allowing senior members of their staff to partner with Mora Incorporated in this afternoon session of information sharing in terms of what's best out there in the market in terms of financial planning. And as an additional service offering of Mora Incorporated is always continued information sharing, continued sharing of the latest practice and as to what exists out there from tax and financial planning. And today, unfortunately, tax financial planning is not as simple. It's a very complex environment out there. And so we are not pronounced to be the experts. Hence, we call upon the specialists to partner with us from time to time. So thank you, gentlemen. And also thank you to all the guests that have joined us this afternoon. I know that it's middle of the week. I know it's late afternoon. But believe me, I'm sure that the information that's going to be shared by our two panelists will be of enormous value. Do take advantage of the option of the question and answers session, and in terms of submitting those questions, and we'll then coordinate that. In addition, you may find that you are not comfortable to be able to raise any issues that you want to. You're welcome to contact myself directly or Sibu at our offices, whereby we will then arrange for you to meet with either Etienne or Luke to discuss any of your specific issues or simultaneously together. I must assure you that when we put these two inverted commas competitors in a room, we thought we were going to be having a fight. And it wasn't any of that. It was such collaboration that we were taken aback that to say, listen, let's do a pitch for Mora Incorporated to its clients that basically embraces everything. We're not competitors, and let's work together. So there will be instances where you may need both professionals in one room, and we're happy to coordinate that to then meet with them at the offices to be able to discuss those things in total privacy and there. I would like to then hand over to our speakers, and it's by no order of preference, but rather the fight was who do we take? The younger looking person, the older, the more experienced, and we decided no, let's go with initials. So I'm going to hand over to Etienne from Discovery, and we'll all be tracing as to what Discovery has been doing in the market. It's like PSG. PSG in its quiet corner in Stellenbosch it started, but today a massive powerhouse. Discovery, we originally thought it was just an insurance company, and it's blew the sky out of everything that's there. So well done. So I think we have two companies today with us that are really leaders in their respective fields. So I hand over to Etienne. Etienne, thank you very much.
Great, thanks, Mr. Morar. I really appreciate the opportunity to you and to PSG for making this time available. So I really do actually concur with you that we actually all, part together in it, and it's not sort of an exclusivity where the one fights for the other one's space. We actually, I hope after this session, specifically from myself and from Luke, that you actually need to get advice around structuring, and we all fulfill specific roles in this. And yeah, thank you very much for the opportunity that everyone's on here to listen. So for me, it's a great thing that I can, because I know there's quite a few medical practitioners on here to actually share it, because I actually had COVID end of last year, and the angst and anxiety to actually have it with the family. And a lot of people have that same fear, going investing offshore. And I wish, from this discussion that it's actually not, let's say, that complicated, but that you can go over, but that you do need the help. Like I needed with COVID, I did need the help of doctors to get me and the family through. So I'm happy to partake and share on my side the knowledge that I have. So just, from the point, if you want to make contact with me, I am on LinkedIn. Obviously, you can contact Rashawn Morar Inc. if you'd like to interact, but you can just use your phone, your Android phone, and just connect with me on LinkedIn, and we can take it from there. So for me, the important component in this is investing offshore. I hope you're going to take the view that you need to invest offshore. Invariably, it's very rare scenarios that people don't need to invest offshore. But also, once you want to invest offshore, I hope you're going to actually take from this that you need to take that advice specifically from like a PSG, like Luke, as a financial planner. And in some instances, you also need the assistance of accounting and tax firms like Morar Incorporated to sort of handhold you through a process, because it's simple to invest offshore, but it can be, there is many things to take into consideration versus just an investment locally. So just to touch on a few things, I'm going to give you some rationale to invest offshore. And then mostly the points that I'm going to talk to is point 2 and 3. And then finally, obviously, us from Discovery side really are, from our point of view, very well structured to actually assist advisors and clients to actually invest offshore in a very acceptable manner. So, like Mr. Rashad mentioned, Morar, I've actually been in offshore space for around 15 years. And I still remember my first presentation I noticed, or from the specialist back then, he was saying, when you look at Earth as an alien coming into, onto Earth, would you put all your money into a component of the globe where only 1% of the assets are? And for me, that stuck because that is a common theme that's being used. But again, with your wealth that you have now as an investor, the whole world is actually open to you to invest. So for example, just using some scenarios, you want to have currency exposure in different currencies around the world. There's different benefits, interest rates around it, access to wider opportunities and sectors. So for example, the US has done phenomenally well. Why have the US done very well? Because they have the biggest technology sector, Facebook, Google, all of those are there. And that's why you can access it. Unfortunately, South Africa doesn't have that big exposure. Sometimes you want geographical diversification, because geographical diversification will potentially give you access to dynamics and, for example, demographics that you might not have in South Africa. So, for example, the East, where the population in China doubled in just over 20 odd years, and that can bring forth opportunities to invest in from a global perspective. And then access to larger investments, and I'll touch on this right at the end as well. But I mean, there's hundreds of thousands of options out there. It might be overwhelming, but at least you've got the opportunities. For me, though, bringing it down to into our discussion over here is you can actually optimize tax from a tax point of view on your investments. And I'll use an example in the next slide or so, just to show just being taxed in a different currency, how much of an impact it can have to you as an investor from that point of view. Also, diverse jurisdiction exposure. Over here, for example, if you want to set up a company into Africa, you would, for example, go the route of starting a company in Mauritius because they have the most double taxation agreements, and we're all incorporated as links into Mauritius through associates. And you can invest into Africa much more easily. If you've got an online gambling business that you want to set up, you want to set it up in Isle of Man because legislation there is much more friendly. So there's quite a few reasons why you would want to invest globally and actually take on the opportunity. Obviously, family planning, if you have children that's going to plan overseas or you're planning to move overseas in the future. Again, Luke will touch on this later from a planning point of view. But for me, it's important. A lot of times people want to invest offshore because they want to take on the opportunity to invest offshore. So always remember what is the reason why you want to go offshore. So generally the first setup is when you're seeing an advisor or the options thrown at you, is basically you can invest very simply on a local platform that invests overseas. So you can invest into a fund that invests in a global range of shares, but it's always priced in rand. So your options are quite limited to only funds that's registered in South Africa. Not that it's wrong, I'm just saying your options are limited. But whereas if you take your money overseas, you're going to get the investments in dollars, pounds, euros. You can invest in shares directly, ETFs, structured notes, etc. But it is a bit more of a longer process. And taxation works differently in these options. And I've got an example on the next slide here, but also further implications is if you're using a feeder fund, like we call it in the financial speak, there's other costs that you don't, for example, pay. You pay VAT on asset management fees, which you don't on offshore funds. There could be other fees into it to actually access the offshore versus direct offshore. And here, I'm not going to go into the calculation, but specifically, if you're using the asset swap route from a local fund investing overseas, both scenarios putting a 5 million rand in at 10 rand to the dollar, just assuming growth of 8% in dollars, the amounts are the same, and the rand is 13 rand to the dollar. If you look on the side, on the right-hand side, being taxed on the rand growth, you're actually taxing on the rand weakness as well, which you don't fully experience on a direct offshore investment. So purely just making that decision in using a different route to invest in, potentially still investing in the same shares, you save 270,000 rand. And again, what I'm trying to highlight here is the one is not better to the other. It's just in specific scenarios, some options do work better for you. So for example, these feeder funds are very good for retirement money, or if you've got a smaller amount that you want to invest, as an example. And again, that's why you need to link up with financial planner and accounting firms and tax. So for me, just to quickly touch on these things, you have what is often missed. It's an annual allowance to invest directly overseas. So you have R1 million that you can pay Netflix for, or Uber, or actually just, buy something on AliExpress or something like that, but also do investments. And that's simple. You don't need a tax clearance. And you have a clearance of 10 million rand. Again, calendar year, because a lot of times people get confused with tax years. It's not March to February, it's Jan to December. So we as investment platforms are generally very busy around the November to February period, where people are using these allowances around the starting and ending of the allowances. So also have special clearance for the wealthy individuals. For example, you've got 100 million rand, plus as an example, where you can apply for special clearance. The process is a bit more onerous over here, and it is a lot of times comes conditions linked to it, so that option is also available. The one point I want to mention around at the bottom, where if you have a local company or local trust that want to invest overseas, a lot of times people think you can only use a local platform, but you can actually still use an offshore platform and get the benefit, like I showed in the previous slide, on being taxed in a hard currency versus taxed in the rand growth, to get a better net after tax return to you as an investor. So now that you go and decide you want to invest directly overseas, there's a few options. I touched on the feeder fund, and then it sort of staggers down to complexity around offshore investing. So a lot of times I still used to get people investing saying, listen, they just want an amount in an offshore bank account. So they go to Standard Bank offshore, drop, let's say, $30,000, $40,000, $50,000 in the overseas bank account. But yet they earn zero on that return, on that asset, and it's just sort of a backstop. But they don't take into consideration implications that your executor can only deal with assets in South Africa. So now you're sitting with an amount of money in, for example, Jersey or Guernsey, Isle of Man, etc., and your local executor can't run that process. You have to go through probate. And Luke will touch on probate just now in more detail. The next point also, which people do, is they start like an offshore share portfolio or just buying funds directly. But like an offshore share portfolio will take on very onerous tax obligations if you don't structure it correctly, like inheritance taxes, which is up to 40%. And as you know, in South Africa, you only pay 25% at most. So to pay 40% for an asset is really not the best planning. And that's why you need to link up with planners. So the option that comes up quite a lot in our space is the use of offshore endowments or sinking funds, as they call it. And I'll touch on it in the next slide in more detail, just to sort of break it down that it's not just a simple decision. And then finally, if you've got really the more complex setup structures, is around setting up an offshore trust or offshore company. There is a lot to consider on these options, people trying to get money overseas, but you need to understand this is much more expensive. There is always going to be tinkering needed with these structures, and you don't have the control that a lot of people think they have with local trust. So it's much less controlled from your side, and a lot of times people bring in offshore companies underneath offshore trust. But again, there's lots of rules around it. So you have permanent establishment. So if you set up a BVI company, as example, you've got to have a permanent establishment there, potentially utilizing local staff there, etc. So it does get more complicated around it. And again, these are just a few options mentioned, and all of them are suitable for an individual, but each one's, you need to use for different scenarios. So, for example, if your neighbor says, I've got this share portfolio and works like a charm, doesn't mean it's exactly the same and it's going to work for you as well as it works for him in his specific scenario. So that is why you need to link up. So finally, if you just look at maybe just going the option of offshore endowment, I just highlighted some points over here, just with 4 of our competitors. There's about 4 or 5 well-known companies in South Africa that do these types of investments. And a lot of these, you can drill down into what makes them different to the competitor and what is actually the more preferable route for you as an individual. And that's the role of the advisor, to make sure that you got the correct structure in place. So, for example, jurisdiction, for me, that is a very important factor, which is very often overlooked because there's complicated benefits to it. So, for example, if you look at Guernsey has a very interesting benefit in that, what we call a black swan event, which is not really something we want. But for example, if an insurance company does go bankrupt, what the benefit of a Guernsey contract is that the assets are held, of the investors are held in a trust setup. So even if the insurer who's holding your assets do go under, that your assets are held safe in a trust setup. And that is not true for every jurisdiction. So you could be sitting with company-specific or insurance-specific risk investing in some of these different jurisdictions. So it's smaller things like that really makes an impact and for you in deciding which is the correct asset. And again, that is not a point that's very well known. And you can drill down in all of these different points around structure, taxation, even a simple thing like taxation is handled differently between the different entities. And also the investment choices. So for example, you might want to run a share portfolio, but not everyone has a share portfolio available or access exchange traded funds. So the last point I want to touch on is maybe beneficiary types. Now, a beneficiary is basically comes into play on an endowment or sinking fund, basically where you as the investor have put, for argument's sake, 3 million rand in an offshore endowment. When you pass away, actually who takes over that asset? So you can nominate with one, which is really great, and I think Luke's going to touch on this just now as well. But the impact is there's different types. So some of them say, okay, we're going to pay out the amount to your beneficiary, where other options, where they call ownership, the ownership of the contract actually changes to that next in line beneficiary. But again, in this scenario, it could be different to your neighbor. So for example, you could have a son in the UK or Canada or the United States or wherever, and for them, they don't want to take over a contract which has got links to South African SARS, and you need to pay tax to SARS when you're actually a resident in another country. So you'd actually prefer the route of proceeds. So again, this is all the nuances that needs to be considered when taking out. And for example, this is just 5 competitors in South Africa which we compete in. Everyone is different to one another. And then finally, just from our side, I mentioned there's a lot of portfolio managers. We are on Discovery side, obviously linked up with a lot of well-known companies. You might not know of them, but they're exceptionally well-known large asset management firms that we have available on the platform. But what we've also done from our side is we've made it simple to investors where we've got risk profiled assets. So basically conservative moderate growth, and where we get it managed by BlackRock in the different mandates to fit to how a financial planner wants it with you. And then you can link up with share portfolios. So share portfolios, what we've done we've linked up with Goldman Sachs, which is a very well-known global portfolio manager or wealth manager, and they're running very bespoke portfolios for us around, technology, millennials, etc. And then also on the right is a whole range of assets. As you can see there, they filter 125,000 funds, and we sort of break it down into looking for specific equity funds. Not going to go into details over here, but it's just to show that there is different options available packaged to the investors who want to approach Discovery. So, and then lastly over here, all of us have got different biases in how we grew up and how we approach life and what we do as investors or even in our business. So for example, loss aversion, I know quite a few investors that I told last year in March don't cash out. Just, where people were nervous, and a lot of people did use the option to cash out because they're scared of losing more money, yet they've missed out on that opportunity. So I don't want you to go in the top right and do a regret bias and not taking the opportunity to actually discuss your offshore investments and planning on offshore investments with financial advisors or Morara Incorporated, because you do need to have some partner with you to actually invest overseas. So thank you very much. There's all the legalese that I need to show. But if you want to connect with me, you're always welcome to connect via LinkedIn or obviously contact Roshan and his team to make contact with me. Thank you very much. So from my side, we'll deal with questions later, but over to Luke. Thank you very much.
Thank you very much, Etienne, for that. I think it was very informative, and we look forward to the questions coming through. And I think you raised some very interesting points and some very interesting facts that persons need to consider as to their financial planning, whether it's locally or abroad. I would now take the opportunity of handing over to Luke, and I really urge everybody to please send in your questions, because this is the ideal opportunity, an ideal platform for you to start raising any of your issues, even if it's just a very simple issue that you might Nothing is silly. Everything is important. And just ask the questions, and both the gentlemen will be able to then add value. Can now hand over to Luke from PSG, who will continue and to lead from what the discussion that's come through from Etienne from Discovery. Thank you.
Fantastic. Thank you, Roshan, and afternoon, everybody. Thank you for attending today. It's a pleasure to be with you. I'm so excited that you've taken an hour out of your time to think about your financial future and your wealth and your money. I feel like as people and as business owners and as practitioners, we spend so much time helping other people and looking after other people's needs and our clients and our patients, yet we don't often take some time out to think of our own wealth and our own future. I remember it was about 3 years ago, I took my eldest son, who was at the time 3, to our pediatrician, and we went into her room. She sat down, she rattled off a long list of all the different medication that I should prescribe to him. She checked everything on him. She checked in his ears, his throat, his nose, and she rattled off a long list of the medication. So I got home and my wife said to me, Luke, so what did the doctor say? What should we give him? And I said to her, I can't even remember the first thing that she said on the list. And it's just funny how we all get stuck in our own worlds of our careers, that when we hear somebody speaking from another occupation or another field or industry, it can seem like Greek. It can seem like a foreign topic. And so I'm hoping that today I will try and bring some simplicity so that you won't have the same experience that I had, where I couldn't remember anything that our wonderful pediatrician told us. So today there's 5 points that I'd like to touch on. We're going to look at why it's not always a good idea to leave all your money in South Africa. I'll touch on us as specialists. I'll give you some ideas on investing offshore, some problems that you need to try and avoid, and just touch a little bit on some changes that have happened recently on immigration, which could be quite topical for you. The risks of staying local. I don't even need to go through this list with you folks. It's quite self-explanatory, the problems and the risks that are associated with our lovely country. Please don't get me wrong, I absolutely love living in South Africa. I'm sure you do as well. But there are things that we need to be aware of. Our currency has been steadily weakening over time. We've had some pretty pedestrian investment growth on our South African stock market. Obviously, we've got political risks. I don't think that's going to go anywhere anytime soon. Policy risks in the sense that, you know, government could change legislation or policy at any point in time. We've got naturally higher inflation than most of the developed world. Fortunately, no hyperinflation like our northern neighbors. And it's the constant concern of the long-term future of our country. And these factors all come together that result in us needing to, as stewards of our own money and your money, is to consider not having everything here and leaving it exposed necessarily to the risks of South Africa. And the trends that I'm picking up when it comes to offshore investing is that the world is becoming a global village. If you think about even pre-COVID, but what COVID has even done is actually exacerbated this trend, is that in the past you would live in one country or one town, your kids would go to school there, you would send them to the university in the town, you would work, you would probably even retire there, all in the same town or even the same country. But the direction that the world has gone now is that it's a global village. You will work in one town, in one country, and your kids will go to school in this country or go to varsity over here. And you might have a holiday home in Portugal, and you've got some investments overseas, and you are employed here. And so what's happening is that the world is getting spread into different areas. We've got people moving around a lot more, And so it's not a case of everything staying in South Africa anymore. You can still live here, and it doesn't mean that we've lost our patriotic connection to our country. I love living here in South Africa. I've got no intention to leave, but that doesn't mean that my money and my wealth needs to stay exposed to those risks. So there are two types of people on this call today. There will be one camp of attendees who you are your DIYers, you do it yourself, you are happy to do your self-help options when it comes to investments and do things on your own. And then there are those that are looking to trust the experts and to hand that skill set over to some specialists. And that would be, for example, Mora Incorporated on the tax side, on the product side, Discovery, and on the advice side, myself. And you might be in that camp where you say to yourself, look, I'm interested in this, but I need to call upon the experts. And there's a reason, we don't service our own car. I don't submit my own tax. I outsource these things to specialists. And so that is what we are here to do as a grouping of us three together. And many of the attendees on this call will be doctors and medical practitioners. And I'm sure you see it as well, where someone walks in and they've asked Dr. Google, and they'll say to Dr. Google, I've Googled my symptoms, don't worry, I know exactly what I need. And unfortunately, as Google says, never ask Google for medical advice because you could have a mild headache or you could be clinically dead. It's that extreme. So offshore investing is not necessarily for everyone. For a large portion of us, it will be a good idea. But my role as a financial planner is to first peel back the layers and just understand, is that actually the best thing in your best interests? So based on the fact that we've got a number of medical practitioners on the call and doctors, and there's a number of business owners, I wanted to just try and position how us as experts can help you. A doctor is very similar to a financial planner in the sense that the doctor's role is there to diagnose and to figure out what is best for the patient. And in this instance of finances, you as the client will be the patient. And so and then we have what's called the product provider, who actually provides the actual tools that we're going to use to invest. So to just help you understand this financial world that Etienne and I operate in, is that I am what's called a financial advisor, and I, as your doctor, make use of the various service providers that are available in the market, of which Etienne is one, and one that we do regularly use for our clients where it makes sense and where it's in their best interests. And so I form part of a network of independent or unrestricted financial planners under the umbrella name of PSG. We've got over 200 offices in the country and about 1,000 other financial advisors such as myself. We're actually the biggest network of independent or unrestricted financial planners in the country. And so in a similar way that if you were a doctor, you would be making use of certain product providers in your space, it's the same role on my end, where I am not set or affiliated to any one of these particular service providers. Today, I'm partnering up with Discovery, and they have been a long-standing good partner with us at PSG. And so I would be the doctor who understands what your needs are and what is important to you. And then if need be, I will call upon, or I will use one of the service providers to provide the actual products that we will be using. And in many instances, even as a doctor, I've got a friend who works at Smith & Nephew. Many times he regularly scrubs in with his surgeons. And it's in the same manner that Etienne and I will often meet up with the client together, or in a joint meeting where he brings the technical skills of the product, and my role is to diagnose exactly what it is that you actually need in your overall picture. And so being your doctor or your financial planner, we can't start at the end, which is starting with what product to use. That's almost like a patient walking in and you jump straight to what's going to be the best prescription for them when you haven't even diagnosed what it is that they actually need. And so one step before that is the diagnosis phase. And in our world, that is understanding where you are at in your finances. Where are you today with your money and your investments and your wealth? And then where is it that you're trying to get to? What do you want that future to look like? What are you building up towards? And then we can look to what are going to be those products or those potential investments at those different service providers that we can possibly use. And so, yeah, you know, what's a good thing with the way our financial planning industry has gone is that we've moved into a space now with me being part of some of the new generation of financial planners, where previously what used to happen is a financial advisor would only get remunerated by selling a product. And you can see the flaws in that nature is that, you know, he gets incentivized to sell a particular type of policy. He's naturally going to try and sell as many of those as possible. Whereas the new type of financial planners that we have, such as myself and many others, is that there's no product to be sold. We don't earn upfront commissions from things like that. We charge a small ongoing fee that is billed month to month, and you're only paid if you are getting value. And so you need to continue experiencing good ongoing financial planning service for you to maintain that relationship and still be satisfied. So it's very much improved the way the industry has gone, where now as a doctor or financial planner, my role is to take a step back and to diagnose exactly what it is that is going to be the best solution for you. So how best to invest offshore? There's broadly two avenues or procedures or routes to go. Etienne touched on this, and I'll add and flourish a little bit more to what he's already alluded to, is on the one side, you can keep your money in rands in South Africa, but the underlying investments are still linked to overseas growth or overseas investments. Whereas the other route is to physically take your money outside of the country and to convert your money to a foreign currency, for example, dollars, and there you are going to own the investments directly overseas. And so, you know, as me being a financial planner and I, you know, come across many scenarios, to give you a bit of an idea of when does this make sense, many times, you know, on the advantage side, what we do with this is we are very cognizant of the tax difference as what Etienne alluded to, and what Marat will be a fay with is making sure that any capital gains that this money is going to grow by is rather going to be taxed, if possible, in dollar terms instead of on the rand weakness on the asset swap route, which is a feeder fund. And so in what instances do we do that? It's generally, as a person, it's for very long-term money that we consider going directly into dollars. A typical person that is someone who it would make sense to go physically convert your dollars and put it overseas in an offshore investment physically in dollars is someone who, number one, you've got a very long time frame. In other words, you don't anticipate needing this money for 5 to 10 years. It doesn't mean you can't call upon it. It just means that your intention is that you don't need this money for your day-to-day living for the next number of years. And the second time is when individuals, or you might have some feelings of uncertainty with the way the country's going. And, you know, from a political point of view, or, you know, we've had the riots this year. And so for many individuals, just that feeling of having dollars overseas can be enough to make them feel as though they don't have all the eggs in one basket in South Africa. And so many times in financial planning, you know, there will be a financial benefit to something, and there's also an emotional benefit to something. And sometimes we often choose something that gives us that emotional benefit. In other words, the peace of mind or the comfort or the reduced anxiety by knowing that our money doesn't physically necessarily sit in South Africa. For other individuals, when is that asset swap route better, where it's based still in rands in South Africa? You haven't taken the money overseas yet. It just sits here, but it's linked to the growth of overseas investments. In what instances does that make sense? So there, it's pretty much opposite to those other 2 points I raised. It's for people who are not too concerned that, you know, the country is going to become another Zimbabwe overnight. They don't feel as though their money is going to be sucked out of their bank accounts by some leftist regime or something crazy like that. And then also they might need to call upon that money a bit more sooner than very, very long term. But both routes can give you exposure to those overseas and those global markets that Etienne referred to, where you don't have all of your money associated just inside 1% of the global market. So when going offshore into these two routes or two options, what are the actual underlying areas that you can choose to invest in when you do go overseas? So this list at the bottom basically represents some of what we call asset classes that are available to invest in overseas. And they're quite broad categories, so to speak, of different areas that we can place your money. And on the right end of the scale, you can see there that circle in US cash is referring to money invested in a bank account overseas. Now, you might be familiar with South Africa having fixed deposits, and you can get a fixed deposit in ABSA, and you'll get a 5-year fixed deposit. I just recently had the annual check-in of an existing client of mine. We meet once a year to reassess his financial picture and to make sure he's on track with his investments. And he just had the opportunity to invest in a 10-year fixed deposit at Deutsche Bank. And the interest rate on that was 0.001% per year. So you might as well call that 0%. So many times when going offshore at the moment, there's very low interest rates overseas. Global bonds is another area giving very, very low growth, potentially capital losses. So the main area that we see an opportunity now is in global shares or global companies overseas. So some of the names that you would have seen on Etienne's slides, your Facebooks, Amazons, Googles, Alphabets of the world, that are where the opportunities are. And the viewpoints going forward is that there is still opportunity. Some fund managers that we use expecting anywhere from 10 to 15% investment growth per year over the next 5 years. Second to last touching point, I want to cover some of the pitfalls that we come across and some of the things that we see. So I'll give you a story of Mr. Maharaj. It's not his real name. When we started working together, we looked at all of his investments and we picked up that, you know, look, he's got a decent amount of money overseas. Maybe we can consider increasing that to 20 or 30% so that he's got a good mix, a good balance. And then we started to pull in all of his other assets. And what we noticed is that many people forget to look at their bigger picture of their wealth. And so when we did this for this particular gentleman, we noticed that all of a sudden he actually had 98% of his wealth was linked to South Africa. That's after we brought in the value of his business, the value of his property, his primary residence, his investment properties. And so he had 98% of his wealth exposed to one country, with one currency, with one economy, with such a concentrated exposure to those areas. And this is what many people forget to pick up on, is looking and taking a step back and looking at their bigger picture. And so sometimes how that comes through is that of your investments, let's say you've got 5 or 10 million rand that's investable money, maybe a huge portion of that is offshore, because that outweighs your properties and your business. And so it might, if you looked at that in isolation, that one investment, you might say, whoa, so that's very aggressive. I've got 90% of that money overseas. But when I take a step back, you might notice that it actually makes a lot of sense in the overall picture of your particular wealth. So I'm not saying that we're going to go from one end of the spectrum, you know, having, you know, everything here to everything overseas. and this is where I come in as a financial planner, is to guide you as to what is a suitable allocation for you and your circumstances and the direction that you're going. Is it 10%? Is it 20%? Is it 30%? What is going to be best for you? So another pitfall that happens when many people invest overseas is something called probate. And probate kicks in when you pass away. And I often have to remind myself that it's not if we pass away, it's when we pass away. And so probate essentially just means your will, and it just means what happens to those assets overseas when you do pass away. And it's important that you understand that your letter of executorship here in South Africa is not going to be able to get you very far in dealing with those assets that you have overseas. And many people forget about factoring in those overseas assets into their offshore will. And so, yeah, sometimes it could be quite complex and time-consuming to sort out something like an offshore will. And often those offshore executors can be extremely expensive. I've known that they've charged fees up to about 6%. Etienne will know more about that. And it's not easy to facilitate a will overseas from here. And in some European countries, there's something called forced heirship, where your will doesn't even come into play because it has to go to your kids or your family. So another pitfall is that people don't take into account what happens when they pass away, and it could potentially leave quite a complicated mess for their beneficiaries. Another pitfall that we notice quite regularly on the offshore investing side, and Etienne would have picked up on this a lot, is something called situs. Situs is a Latin word. It just means situated. It's linked to the word situated, and it's referring to where are those offshore investments or assets of yours situated? Where is that house in Portugal? Where is that share portfolio actually sitting? And those foreign jurisdictions, in many cases, they want to tax you on those assets. And we touched on this in Etienne's presentation. In the US, you will pay 40% inheritance tax on any investments that are above $60,000, which is actually not a large amount of money in rand terms, if you think about it. And inheritance tax in the UK is a little bit of a higher buffer, but again, 40% on any amount above that. And so another thing to think about is those offshore potential taxes. And to give you an example, was a client of mine, George. He's another global citizen. He lives all over the world, and he's collected a number of different investments over his time. He's got a pension fund in the US. He's got money in a bank account in the US. He's got Portugal. He's got investments in the UK. And when we ran the numbers, when he passes away, he will actually pay about almost 500,000 rand in inheritance tax in the UK. And so fortunately, we were able to notice this before he's passed away. And so we've been able to avoid this problem and to move him into a better solution. And another thing that we notice is that the trends that we're seeing and the pitfalls that come up is that many of our children are not staying in the country. My children are still young. They're only 3 and 6. And I don't know where they're going to end up one day. And so a problem is often, how do those children or our beneficiaries one day, how do we protect that legacy that we've built up, that wealth in our business, that wealth in our practices that we've generated? How do we protect that and make sure that that passes to the next generation in the most efficient way? So to avoid these pitfalls, the fantastic news for me as a financial planner is when I help you and identify if there are any of these areas we need to try and resolve, I can call upon these service providers and make use of them. And they have developed certain investment products that basically mitigate all of these pitfalls that we've discussed. And so number one on the list is Discovery, who, like you know, we're partnering with today. And so they have developed certain products that we use to mitigate those things. And so we mainly make use of something to invest overseas called an offshore endowment. And some of the reasons why we do that is to mitigate those pitfalls. And some of those is that it's an extremely tax efficient way of investing overseas. You can nominate a beneficiary on that investment so that when you do pass away one day, the investment goes directly to your beneficiaries, and there's a smooth transition. There's a wide range of overseas underlying portfolio options to choose from when investing offshore, and it avoids all of the situs and the probate issues of having an offshore will and any funny foreign inheritance taxes that we most certainly want to avoid. In closing, I see I've got about 5 minutes left. I want to touch on some frequently asked questions that I get from time to time. The first one is, I have heard that offshore investing is expensive, and that's probably the number one question I get, and it's just simply not true. There are three parties that basically earn a fee when it comes to any investment, local or offshore. Number one is the financial planner, such as myself, your doctor, who diagnoses what it is exactly that you need. And no financial planner should charge a different fee, whether it's offshore or local. The fee will be exactly the same. It makes no difference. The underlying investments are pretty much the same. And sometimes the service provider, in this instance, if we had to use a Discovery Invest International Endowment, the fee is marginally more expensive per year. It's a very small percentage more expensive on average. And so the fee issue of investing offshore really shouldn't be something that prohibits us from going offshore. What if I need to access my money? Investing offshore, we make sure that the investments that you use there are a number of opportunities to withdraw your money, the capital, all the way up to the amount of their capital. And all of this is known up front. So that's also not something that is an issue. Isn't offshore investing risky? Many clients are concerned about the risks. They just feel that overseas is this big wide world and they get nervous. And to paint the picture, that it's important to understand the difference between risk and volatility. So risk would be if you lost all of your money, but if you invested in overseas shares through an endowment, for example, the overseas share market has never gone to zero or naught. And if the world share market ever went to zero, you can bet your bottom dollar that it is the end of the world. It's the apocalypse. You needed to have invested in canned goods and built a bunker. But this chart is showing you the US share market over a long period of time. And it just showed you that during any 1 year, is the red dot of that calendar year is how low that share market dropped. And so if we just take one, for example, in 2019, the share market at one point in time in 2019 was down 7%. So again, the volatility. But at the end of that calendar year, it actually ended up 28% positive. So overseas investing, it's not so much about the risk of losing your money, it's more that volatility that will happen of the ups and downs being a bit more wider. But again, it speaks to the original reason why we wanted to invest offshore, is that we had a long-term time frame. And when I show you this exact picture in a line graph, you can see that over the long term, investing overseas has delivered exceptional investment performance. And those drops that you see now look very small in comparison to the actual investment growth that you made. And the fourth point I want to raise on, because it's a question I get asked many times, is should I rather go offshore with my money, or should I invest more into a retirement annuity? And this touches a bit on the tax side, and so Mara can also assist in this regard. Is the main advantage that we've had over the number of years on the retirement annuity side is the tax deduction of your contributions. But what I'm noticing, and the trends I'm seeing a lot more nowadays, is that the disadvantages are starting to weigh up a bit on the retirement annuity side. And so this, again, has to be looked at in your set of circumstances. But as a general idea for many folk, we are starting to allocate more of their retirement money for retirement, but through offshore investments instead of necessarily using a retirement vehicle. And there's a number of reasons for that. There's a lot of policy risk in South Africa, where you've heard talk of government accessing pension funds. We can only invest 30% of a retirement annuity offshore, whereas if we go offshore, we can have 100%. So we don't necessarily have to use a retirement annuity. And then, as Mara will know, the income that you draw from retirement funds one day is taxed like a salary at very high tax rates, whereas the taxes on an investment such as offshore is limited to 18%. And that's at the bottom ring of your income tax tables on income that you earn. And there's also a potential exit tax on immigration. So that debate that I'm getting a lot of questions from many people is it needs to be considered that a retirement annuity to save with that for retirement is not just a one-way answer anymore. So in closing, second to last point, it's quite topical, immigration. Many of us have had that on our minds, possibly with the events of this year and the way our country's been going. And there's been some developments since 1 March this year. A process of financial immigration has now fallen away. If you wanted to leave South Africa before this point in time, you had to go through a formal process to tell the Reserve Bank that you wanted to leave, whereas now the Reserve Bank has said, look, we don't want anybody to formally sever their ties with the country. We want to keep close relationships with you, and so please don't formally financially immigrate. There's a new process that has taken place if you want to cease to be a tax resident, but you can still be a citizen of the country, so that maybe one day you do want to come back. There is a exit tax that will apply when you do want to immigrate, and there are some proposed tax changes to tax your retirement fund when you cease to be a tax resident. The immigration side is quite detailed. It's quite nuanced. There's a lot of changes that have come about. I just wanted to touch on it at a very high level, but if it is something that you're considering down the line, it is worthwhile just having your eye on that horizon. Myself, I don't have any intention to immigrate right now, but I'm just structuring my investments and my wealth in such a way that it's not all tied up in the country. It's more accessible. It might be offshore already and things like that. So in closing, I want to encourage you to try and think of your future, do some planning. Many of us, we don't even plan until the weekend, and so I want to encourage you to take some time out and to consider doing these first steps. Think about what you want your future to look like. What do you want your lifestyle and your future days to look like? What is that going to cost you? Where do you want that money to be? Where do you want to be living? And then we can take stock of what you've got, where you are invested right now, and then is where you invested right now the right place to make your future happen? And then connect with me. Send me an email. There's no consultation fee to meet up with me or to have a discussion. As financial planners, the new generation, there's no upfront commissions, and so it would be lovely to connect with you to learn more about your situation. If I can help you or give you some guidance, I will let you know, and if I can't, that's also okay, and I have a number of colleagues who might be better suited, but today's the day. Take that time out to really assess your situation. And last point is I, from time to time, put out some very interesting communications on personal finance and investments that I send out probably about once or twice a month. I also include some updates that are happening on the investment side. So take down my email address. It's on the screen, and send me a mail if you'd like to sign up to that. And that's it from me for today.
Thank you to our presenters. Thank you, Luke. Thank you, Mr. Etienne, for opening up our eyes to this wonderful world of wealth and planning. I'd like to encourage everybody to connect with our specialists. These guys seem to know exactly where to put your money, and you will not lose any money. So thank you, guys. Thank you, gentlemen. We've got 2 questions. I'm going to give one to Etienne and one to Luke. The first question, Etienne's answered it, but you can tell us. It says, is it easy or beneficial to invest offshore if you don't have a huge lump sum of money, but rather prefer investing a certain amount of money on a monthly basis? Thank you, Etienne. Let's take that through.
Yes, thank you. So actually there was 2 reasons why I specifically joined Discovery, and I'm quite avid, for me, it's my passion that people do consider investing offshore as part of their course of business. And Discovery is the only provider in South Africa that actually allows people to invest directly offshore using their annual 1 million allowance to actually invest directly offshore. And we've got the mechanism and everything in place to do it. So for me, that was one of the draw cards, actually taking on the role with Discovery, because it's a very simple an efficient way to build up offshore wealth. So Discovery's got that option. Speak to your advisor, and yeah, unfortunately, or fortunately for us, we're the only provider that do it. So take it up. Thank you.
Thank you, Etienne. Luke, what are your stances towards crypto assets? Does it form part of your portfolios? Do you both make use? Okay, he wants both of you to make use of blockchain technology.
Sure. So crypto, we need a lot of time to unpack that one. But let me try and position it where I think crypto can fit into your financial planning. First of all, crypto is most certainly not regulated at this point in time in South Africa. So that means that as a financial planner, I cannot give you assistance on that area. But naturally, I mean, I myself am interested in crypto and interested in the technology that it brings. And so, where does crypto fit into your particular financial planning? It fits into the same way that financial planning should be done for any other investment that you choose. And so what that means is you first start with what is it that you're trying to achieve? In other words, what do you want your future to look like? In other words, I want to retire with 30,000 Rand a month, or I want to buy this property in 10 years, or what are you solving for? Where are you going? And then the next question becomes, what is going to be the best investment vehicle to get me to my destination, the future area or desired future state that I want to get to? And then we can start to decide, okay, is crypto going to be the thing that's going to get me there? What are the pros and cons of using that compared to any of the other areas? And in certain instances, that actually might make sense for somebody, a small portion that might go into that area, as long as that person understands that the risks that are going with that. So for example, for me, I've got many future goals. So I want to retire at 65 and I want to have X amount of income, and I don't want to mess around with that goal. So I've gone quite vanilla with the things that I'm using to fund that. But then I've got other goals that are more like speculative of things that I want to do, like future holidays and things like that. So with that instance, I can maybe take a bit of a punt on some crypto for that purpose of my financial planning. Because, hey, if crypto ends up being a farce one day and I don't end up going on that holiday that I earmarked that money for, my vanilla stuff that was funding my retirement annuity is still intact. Nothing's gone wrong with that. So it's just about prioritizing what you're using to invest in against or for the different purposes that you are actually investing for. And so maybe one day crypto does become, more mainstream. It's incredibly volatile, and that's the thing. In some instances for people, I set up a bit of a way to almost funnel profits into their retirement type structure. And what I mean by that is not funnel, but sort of take profit off the table on this risky side. So let's say they've gone into crypto and they are making some money because it's gone up, and they only tell me about the times that it goes up, not the times it goes down. And I tell them, okay, take out the money that you've made, or take out half of that money, and let's transition that into the vanilla thing and fund that purpose for your retirement. And that's one strategy that you can use so that you don't have all your eggs in one basket on the crypto side. I hope that answers the question. There's a lot to unpack on crypto. I'm actually busy putting together an article on how crypto can fit into your financial planning from different aspects. So if you join up to my email address, it'll be coming out in the next few weeks. Etienne, you want to add anything on crypto?
I see we over time, but I'm also on the more conservative side. But I do think, the important thing is the person needs to understand where he's allocating his money to. And if you don't understand what you're investing in and you're just chasing the graph line, then obviously you're running a different risk. And you got to understand that you're willing to take that risk. And that's basically where it comes down to. It's not regulated from that point of view, but there's obviously people making money out of it. But just don't be the one getting in when everything falls down effectively. And if it does fall down, don't. That's why it also links to my question just now. Remember why are you going offshore? Why are you making a decision? And make sure specifically when an asset is volatile that you keep that as remembrance, because you can be happy or sad one day. But yeah, I can't really say yay or no, invest or not invest. So thanks.
Thank you, gentlemen. Thank you for being our guest speakers. I'd like to encourage our participants to come into contact with us or directly to you should they need more information, because I'm sure there's more to this. We do have a recording. Should you require one, we can send it to you and we can follow up from there. We look forward to hearing from you. Thank you. Have a great afternoon. Thank you.
Everyone.
Thank you, Sibu. Thanks.
Thank you.
Thanks, Roshan.
Thank you, guys. Bye.
Thanks. Bye.
Bye-bye.